Tax isn't a surprise if you plan for it. Tax isn't theft like some people say, it's not optional, and it's not something you worry about just at tax time. If you want to keep your business and your freedom, you have to treat tax like a non-negotiable bill. This video will show you how to stop dreading tax time and be ready for it year-round. So many first-time digital entrepreneurs make the same mistake. They earn $80,000 in their first year, they spend $70,000 of it, and they get that $20,000 tax bill at the end of the year that they hadn't accounted for. This is not a rare story, and the Australian Tax Office recently revealed that over 30% of small business owners fall behind in their tax obligations every year. But it's completely preventable if you think ahead. One of the ways to think ahead, like I've suggested in previous videos, is to set up a separate tax account and put away 30% of your revenue every time you get paid. Keep digital records using tools like Xero, QuickBooks, or MYOB, and learn from the start the ins and outs of one of these platforms. Know how to interpret your income statement so that you're never left out of the loop, even if you do have an accountant and a bookkeeper from the start. If you don't want to use one of these platforms or don't know how to use them right at the start, you can use a spreadsheet. Just make sure you have it clearly tracked and then start learning one of these platforms. I recommend Xero because it's very user-friendly for any small business owner. Learn how to strategically use deductions and know what you are allowed to deduct so that you can, instead of paying more tax, reduce your taxable income legally. And don't wait for the end of the financial year to scramble. Have an accountant or an advisor on hand ready before the end of the financial year that you've already consulted. The Australian Tax Office recently revealed that over $33 billion is outstanding in tax debt to the Australian Tax Office. Now, that's a recent statistic for Australia. I can't imagine what it is for the IRS in the US. Here's another staggering statistic. 1 in 5 sole proprietors in Australia under the age of 35 do not have a separate account for tax. Now, I do mention Australia, but this is applicable to any country in the world. They are fundamental principles of accounting and bookkeeping. And here is another statistic that's been reported. On average, small business owners who do put their money aside for tax on a monthly basis are 3 times less on average to fall behind. Now, you don't have to implement these tips, but if you do, you're going to be staying ahead of the system, which is the intention here, rather than, like most people they say, they get crushed by it. So you need to be a pro, not a panicker. Set up your tax account today. Get an advisor that you trust and treat tax like rent. Don't put cash aside. You don't have to do things illegally. The more legitimate you are, the more freedom you're going to have.